What are about, say, 3 things that you could leave behind for our guests from your perspective in this industry, just to give them some competitive advantages?
Well, I think a couple things come to mind. The first one is that you have to have non-consensus ideas. That I think is a really important thing when you're thinking about financial markets, which is the basic idea that, just like we talked about, in order to understand what's likely to transpire, right, in order to make money in markets, you have to have a view that's different from what's priced in. And so what you have to be constantly doing is looking at what's priced into the markets, thinking carefully about what's likely to occur, and then comparing those two things in order to come to a view. All too often, people basically just repeat what the consensus thinking is about what's happening in financial markets, rather than thinking about where the pricing is wrong, because it's really that gap between what's likely to happen and where pricing is. That's where what we call alpha, that's where you get outperformance relative to simply passive investing. And so that's a critical thing to constantly keep in mind as you're thinking about investing and trading markets.
Awesome. I love it. When it comes down to, I can see you're very disciplined and you have a very disciplined approach, and some of the best traders are. And one of those things comes into developing systems. I'm wondering if you could talk a little bit about developing a trading system.
Yeah, well, I mean, in terms of the other thing, another one to definitely highlight in terms of lessons learned is thinking systematically. I think all too often, a lot of us have ideas, intuitions about what's likely to transpire in markets, how the world works, et cetera. And I think one of the challenges is there's really 2 challenges as an investor. One is assessing whether your ideas are actually good. And that's where systemization, that idea of basically taking the idea and checking to see if back through time that was a good idea or not, and whether that would be a good way to trade markets or not through more sample size, is really beneficial. And then the other thing that people often fail at when they're investing is that they're insufficiently disciplined. And this isn't like a moral judgment. Trading markets is super hard. There's a lot of information coming out at you at any point in time. And it's frankly hard to process all that information in a way that's rigorous. And so one of the things you can do is write down your rules. Say, if I see this happen, and I know that it's a good idea, then I will go do this other thing. If I see, the stock market go down below the 200-day moving average, then I'll short the stock market. Let's just say that's a plausible rule that you could do. Well, there's always going to be information coming at you that might knock you off your course. But if you have discipline through systemization, you can more rigorously adhere to the rules or the approaches that will work over time. And that will help you outperform. That will help you succeed in your investment strategies through time.